Please consider supporting our channel by liking this video and subscribing for more content. Unlocking the Wisdom of André Kostolany. André Kostolany, 1906–1999, was a renowned Hungarian-born stock market speculator and author. He was known for his expertise in analyzing financial markets and providing insightful commentary on investment strategies. Kostolany began his career in the financial industry as a stockbroker in Budapest in the 1930s. After fleeing Hungary during World War II, he settled in France and continued his work in the stock market. Over the years, he gained a reputation for his ability to predict market trends and make profitable investment decisions. Kostolany authored several books on investing, including The Kostolany Way to Make Money in Stocks and The Fabulous World of Money in Stocks. His writings emphasize the psychological aspects of investing and the importance of understanding market sentiment and investor behavior. One of Kostolany's key beliefs was that successful investing required a deep understanding of human psychology and emotions. He often emphasized the significance of investor sentiment and how it could influence market movements. Rather than focusing on technical analysis or company fundamentals, Kostolany believed that understanding the psychology of the market was crucial for successful investing. Kostolany's approach to investing made him a popular figure among traders and investors. He was often seen as a charismatic and entertaining speaker, known for his humorous anecdotes and storytelling style. Kostolany's insights and experiences continue to be studied and analyzed by investors seeking to understand the dynamics of financial markets. André Kostolany employed several investment strategies throughout his career. Number 1. Long-term investing. Kostolany advocated for a long-term investment approach. He believed that short-term market fluctuations should not deter investors from holding on to their investments. He emphasized the importance of patience and staying invested over the long term to benefit from the overall upward trajectory of the market. Number 2. Contrarian investing. Kostolany was known for his contrarian views. He believed that investors should go against the prevailing market sentiment and take advantage of opportunities created by mass psychology. He often looked for undervalued stocks that were out of favor with the market but had the potential to rebound in the future. Number 3. Focus on investor psychology. Kostolany stressed the significance of understanding investor psychology and emotions. He believed that market movements were influenced by human behavior rather than just fundamental factors. He paid close attention to market sentiment, investor sentiment, and the prevailing mood of the market when making investment decisions. Number 4. Market timing. Kostolany also recognized the importance of market timing. He believed that successful investing required identifying entry and exit points based on market conditions. He often looked for turning points in the market and tried to take advantage of them by adjusting his investment positions accordingly. Number 5. Global perspective. Kostolany had a global outlook on investing. He believed that investors should not limit themselves to just their domestic markets but should also consider international opportunities. He paid attention to global economic trends, geopolitical events, and international market developments to identify potential investment opportunities. It's important to note that while Kostolany's strategies have been influential, investing strategies can vary based on individual goals, risk tolerance, and market conditions. It's always advisable to conduct thorough research and consider personalized advice before making investment decisions. André Kostolany employed various methods to determine market timing and identify turning points in the market. Number 1. Technical analysis. Kostolany incorporated technical analysis into his investment strategy. He examined price charts, trends, and patterns to identify potential turning points. He looked for indicators such as support and resistance levels, moving averages, and chart patterns that could signal shifts in market direction. Number 2. Contrarian indicators. As a contrarian investor, Kostolany looked for indicators that showed extreme market sentiment. He believed that when the majority of investors were overly optimistic or pessimistic, it could indicate a potential turning point. He paid attention to sentiment indicators, such as the put/call ratio, investor surveys, and media sentiment, to gauge market sentiment and identify contrarian opportunities. Number 3. Economic and geopolitical analysis. Kostolany considered economic and geopolitical factors when assessing market timing. He analyzed macroeconomic indicators, such as GDP growth, inflation, interest rates, and government policies to evaluate the overall health of the economy and its potential impact on the market. He also took into account geopolitical events and their potential implications for market movements. Number 4. Fundamental analysis. While Kostolany was primarily known for his focus on investor psychology, he also recognized the importance of fundamental analysis. He examined company fundamentals, such as earnings, revenue, and valuation metrics, to assess the long-term prospects of individual stocks or sectors. By combining fundamental analysis with his understanding of market psychology, he sought to identify turning points in specific stocks or sectors. Number 5. Experience and intuition. Kostolany's investment decisions were also influenced by his experience and intuition. He had been involved in the financial markets for many years and had developed a deep understanding of investor behavior. He often relied on his instincts and gut feelings when making investment decisions, drawing from his extensive experience in observing and participating in market dynamics. It's important to note that market timing can be challenging, and accurately predicting turning points is difficult even for experienced investors. Kostolany's approaches were based on his unique perspective, and individual investors may have different methods or rely on additional tools and indicators to determine market timing. André Kostolany made several notable predictions throughout his career. Number 1. Predicting the 1987 stock market crash. One of Kostolany's most famous predictions was his anticipation of the 1987 stock market crash. In interviews and public appearances leading up to the crash, he expressed concerns about the excessive exuberance of investors and the potential for a significant market correction. His warnings proved prescient when the global stock markets experienced a sharp decline on October 19, 1987, known as Black Monday. Number 2. Anticipating the fall of the Berlin Wall. Kostolany made another noteworthy prediction when he foresaw the fall of the Berlin Wall in 1989. He believed that the political and economic forces at play in Europe would eventually lead to the reunification of Germany. This prediction came true when the Berlin Wall was indeed breached in November 1989, leading to the reunification of East and West Germany. Number 3. Forecasting the Japanese stock market bubble. In the late 1980s, Kostolany warned about the growing speculative bubble in the Japanese stock market. He cautioned that the rapid rise in stock prices, fueled by excessive speculation and easy credit, was unsustainable and could lead to a significant market correction. His prediction was proven correct when the Japanese stock market experienced a dramatic collapse in the early 1990s, leading to a prolonged period of economic stagnation known as the Lost Decade. It's important to note that while these examples highlight Kostolany's successful predictions, he, like any investor or analyst, also experienced instances where his predictions did not materialize or were not as accurate. A speculative bubble, also known as an asset bubble or market bubble, refers to a situation in which the prices of certain assets, such as stocks, rise rapidly and significantly, far beyond their intrinsic value. Speculative bubbles are characterized by a surge in investor enthusiasm and optimism, often driven by the expectation of further price increases. Here are some key characteristics and stages of a speculative bubble. Initial phase. In the initial phase of a speculative bubble, there is usually a trigger or catalyst that sparks investor interest in a particular asset or sector. This could be a new technology, favorable economic conditions, or other factors that create excitement and attract investors' attention. Positive feedback loop. As more investors become interested in the asset, its price starts to rise. This price appreciation creates a positive feedback loop, as investors see others profiting and rush to get in on the action, further driving up prices. This phase is often marked by a sense of euphoria and a belief that prices will keep rising indefinitely. Increased speculation. As the bubble continues to inflate, speculation becomes more prevalent. Investors may start buying assets solely based on the expectation of selling them at higher prices in the future, rather than considering their underlying value or fundamentals. This speculative behavior can lead to overvaluation and detachment from reality. Frenzy and excessive valuations. The speculative frenzy reaches its peak during this stage. Prices become detached from underlying fundamentals, and valuations become increasingly unrealistic and unsustainable. The market sentiment is driven primarily by greed and the fear of missing out, FOMO, rather than rational analysis. Turning point and burst. At some point, the bubble reaches a turning point. It can be triggered by various factors, such as a change in market sentiment, a negative economic event, or the realization that prices have become unjustifiably high. The bubble bursts, and prices experience a significant and rapid decline. This can lead to panic selling, a sharp market correction, and significant losses for investors who bought in during the peak of the bubble. Aftermath: following the bursting of a speculative bubble, there is typically a period of market correction and adjustment. Prices may stabilize at more reasonable levels, but the aftermath can also involve significant economic and financial repercussions, depending on the scale and impact of the bubble. It's important to note that identifying and predicting speculative bubbles is challenging, and even experienced investors and analysts can have difficulty timing their burst. It requires a careful evaluation of market dynamics, investor sentiment, and fundamental factors. Prudent investing involves being aware of the risks associated with speculative bubbles and exercising caution when making investment decisions during such periods. André Kostolany was known for his witty and insightful quotations about investing in the stock market. Number 1. The only function of economic forecasting is to make astrology look respectable. Number 2. Stock exchanges are filled with individuals who know the price of everything but the value of nothing. Number 3. To be successful in the stock market, you don't need to be right all the time, you just need to recognize when you are wrong. Number 4. In the stock market, the most important organ is the stomach. It's not the brain. Number 5. The stock market is a device for transferring money from the impatient to the patient. Number 6. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. Number 7. The stock market is like a beauty contest in which you have to predict which woman the judges will find most beautiful. Number 8. The most important quality for an investor is temperament, not intellect. Number 10. Investing is about predicting the future, and no one knows the future. These quotes reflect Kostolany's emphasis on the psychological aspects of investing, the importance of patience and discipline, and his skepticism about forecasting and market timing. André Kostolany made several notable investments throughout his career. While specific details about his investment portfolio are not widely available, he was known for his long-term investment approach and his ability to identify undervalued opportunities. Volkswagen: Kostolany is often cited for his investment in Volkswagen (VW) shares in the 1960s. At that time, VW was facing financial difficulties and was undervalued. Kostolany recognized the potential for a turnaround and invested in the company. His investment proved to be highly successful as VW experienced a significant recovery, leading to substantial returns for early investors. Japanese stocks: Kostolany was known for his interest in Japanese stocks during the late 1980s. He recognized the economic potential of Japan and believed that Japanese companies had strong growth prospects. Diversified portfolio: Kostolany emphasized the importance of diversification in investment portfolios. He believed in holding a mix of different asset classes, such as stocks, bonds, and commodities, to reduce risk and capture opportunities in various market conditions. While specific holdings within his diversified portfolio are not widely known, his investment philosophy focused on long-term value and prudent risk management. It's important to note that while these investments are associated with Kostolany, the specific details of his portfolio and the performance of individual investments may not be widely available. Additionally, investment strategies can vary based on individual circumstances and market conditions, and it's always advisable to conduct thorough research and consider personalized advice before making investment decisions. In conclusion, André Kostolany was a renowned investor, author, and commentator who left a lasting impact on the world of finance. His unique perspectives, witty insights, and emphasis on investor psychology have made him a revered figure among investors. Kostolany's investment philosophy revolved around long-term value, patience, and the recognition of market psychology. While specific details about his personal wealth and investments may not be widely available, Kostolany's contributions to the field of investing continue to resonate, reminding us of the importance of disciplined decision-making, understanding market dynamics, and maintaining a long-term perspective in the pursuit of financial success. Help us reach a wider audience by liking, sharing, and subscribing. Your support goes a long way in helping us create more awesome videos.